Hello everyone, and welcome back to the Spoken Library. We all know the rules of money, right? It's just math. Spend less than you earn, invest early, and let the numbers do the work. Simple formulas, guaranteed success. Yet, if money were purely math, everyone who understood compound interest would be rich. But they aren't. Why? Because money is not taught in a spreadsheet. It's taught at the dinner table. It's handled by humans who are driven by fear, ego, bias, and pride. We make decisions based not on what the calculator says, but on how we feel when we see our neighbor buy a bigger car. Morgan Housel's groundbreaking book, The Psychology of Money, tells us one simple, crucial truth. Financial success is less about what you know and more about how you behave. It's about mindset, not intelligence. Today, we're going to look past the stock charts and complex jargon and dive into the human side of money, the part that truly controls your financial destiny. The first thing Housel teaches us is perhaps the most empathetic. No one is crazy. Think about it. A rich person from Manhattan invests their savings in tech stocks, while a retiree in rural Ohio keeps all their money in a savings account. Who is right? Both of them. Everyone has a unique and deeply personal relationship with risk, forged by the time and place they were born and the experiences they lived through. If you grew up during the Great Depression, your idea of safe money will be radically different from someone who only saw the internet boom. Your personal history dictates your financial perspective. When we judge someone else's decision, calling them irresponsible for taking a risk or conservative for playing it safe, we forget that they are operating with entirely different information and emotional wiring. Housel argues that financial planning shouldn't aim to find the perfect strategy, but rather the strategy that helps you sleep at night. The best plan is the one you can stick with when the markets inevitably lose their minds. A slightly less optimized plan that you can stick with for 30 years is infinitely more powerful than a perfect plan you abandon after 3 months of panic. If there are two financial superpowers to possess, they are compounding and survival. The magic of compounding. We all know compounding works, but we rarely grasp its magnitude. Housel gives the example of Warren Buffett. Buffett isn't the world's greatest investor because he started investing late. He is the world's greatest investor because he started early and kept investing for 80 years. Over 90% of his net worth was accumulated after his 50th birthday. Compounding doesn't require high returns. It requires consistency, patience, and time. It's like planting a tiny seed and waiting for the massive tree to grow. The greatest returns are often realized in the final years, making consistency the real engine of wealth, not clever trading. The art of survival. This leads directly to the second superpower, survival. Getting rich requires optimism, taking risks, and pushing boundaries. Staying rich requires the exact opposite. Paranoia, humility, and the fear that everything you've built can be lost in a moment. The single most important factor for long-term success is simply not being forced to quit. This means building a margin of safety, a financial cushion, that protects you from unexpected, worst-case scenarios, like a sudden job loss, a medical crisis, or a market crash. Never bet all your chips. The only way compounding works over 8 decades is if you survive all the setbacks along the way. Your primary job is to ensure the game continues. This is perhaps the most challenging and non-mathematical part of the book. Defining enough. Housel shares stories of successful investors and executives who had billions, yet they risked it all for just a little bit more, losing everything and ending up in prison or worse. Why? Because the goalpost kept moving. Social comparison is the disease of modern finance. We don't gauge our wealth by what we need, but by what the person next to us owns. The problem with chasing more is that the price you pay for that extra money, the risk you take, the time you lose with family, the integrity you compromise, eventually becomes far higher than the gain. Housel's lesson is simple. The hardest financial skill is getting the goalpost to stop moving. The point of enough is not about being conservative. It's about avoiding regret. If you have enough to live the life you want, then risking that comfort for a marginal gain is simply not a profitable trade. Know your finish line, and don't look over the fence at your neighbor's portfolio. We often confuse wealth with money. Money is what you see, the flashy cars, the big houses, the designer clothes. But Housel reminds us that C is just money that has been spent. True wealth, by contrast, is invisible. It is the savings that are sitting in your account, unspent. It is the option value of the future. And what does this invisible wealth buy you? It buys you the most valuable commodity in life: control over your time. The highest form of wealth is the ability to wake up every morning and say, I can do whatever I want today. Savings is the gap between your ego and your income. The more savings you have, the more control you have over your time. The more control you have over your time, the happier you are. This control means you can quit a job you hate without panic, wait for the right investment opportunity, or spend an entire summer with your kids. That ability to control your schedule, your environment, and your decisions is the ultimate dividend of financial wisdom. It is worth far more than any luxury item. Building on the idea of invisible wealth, Housel forces us to confront the biggest behavioral hurdle in finance: ego. The man in the car paradox. Housel has a brilliant observation he calls the man in the car paradox. Imagine someone driving a multi-million-dollar sports car. As they speed by, what are you thinking? Are you thinking, wow, that person driving must be amazing? Housel says no. You're thinking, wow, that car is amazing, and I wish I were the one driving it. The paradox is that when people spend a massive amount of money on luxury items to gain respect and admiration, they fail. They don't actually get the admiration. They only inspire others to want the thing they bought, not to admire the person who bought it. If your goal is respect and admiration, seeking it through expensive spending is arguably the least effective path. Humility, kindness, and empathy attract more genuine respect than horsepower ever will. Avoiding the trap of you and me. Another key lesson is the danger of comparing your investment game to someone else's. Housel reminds us that we are all playing different games with different time horizons. Imagine you see a professional hedge fund manager buy a stock and you copy them. A few weeks later, they sell it. You panic and sell it too. What you didn't know is that they might have been on a 5-week trading timeline, while you were on a 20-year retirement timeline. When you copy someone else's move, you are likely adopting their financial timeline, goals, and risk tolerance, all of which are irrelevant to your life. The market is not one game. It's thousands of different games being played simultaneously. You must define your own game, your own goals, and your own survival horizon. Never take investment cues from someone who is playing a game you don't understand. The psychology of money gives us permission to stop feeling inadequate when we don't follow the smartest formula, and instead focus on what truly matters: behavior. If you take only 3 ideas away from this book, let them be these. Survival is the strategy. The greatest financial superpower is time. Never take risks that could wipe you out and remove you from the game. Preserve your margin of safety at all costs. Wealth is invisible freedom. True wealth is unspent savings, giving you control over your time and options in the future. This is worth far more than any display of ego. Define your own game. Know your time horizon and you're enough. Never try to win someone else's game. Humility is required to survive, and perspective is required to thrive. So, as you go back to planning your budget or reviewing your investments, remember to listen to the math, but trust your mind. Don't chase the returns or the status symbols of others. Chase the peace of mind and freedom that comes from a durable, personal financial plan. What behavior change are you going to implement today to secure your future freedom? Let me know in the comments below. If you enjoyed this summary, be sure to like and subscribe to the Spoken Library for more insights into the books that truly change the way we live. From the Spoken Library, keep learning and keep thriving.